You should be able to see my screen, hopefully. Sorry about the pause there. I was just, we couldn't decide who was changing screens. I've now lost the chat box somewhere. It's disappeared onto one of the other screens. Oh, here we are. Just move that out of the way. There we go. That's it. Very warm welcome. Good to see you. I just thought we'd start off rather than, I've got my eye on what is going on in terms of indices at the moment. It's all a bit lackluster, to say the least. A lot of sideways price action. So I just thought we'd start off with the majors. I've got the currency majors here. I showed this last week, and really it's a visual representation of all the currency majors. It's a visual representation of the currency matrix, which gives you all this information. But essentially, this is the manual version, if you like, where I've got 6 of the majors. Anyway, I've got pound dollar, Aussie dollar, euro dollar across the top, dollar CAD, New Zealand dollar, dollar Swiss down here. And what it gives you is an instant view of what is going on, obviously in terms of the dollar, but what is going on across the matrix itself. So visually, what you're looking at in the top line, at any rate, where the dollar is the counter currency, it gives you a straight heads up as to whether dollar buying or dollar selling, and in this case it's obviously dollar buying. You can see the dollar buying here, it's very, very strong. And that strength is obviously reflected in the spread of the candles, which are widening, as you can see. And on cable, we've got some rising volume, we've got widening price spreads. So it's pretty strong, that selling of the pound, but pretty strong buying of the dollar, as you can see here. And what you've also got over here is the currency strength indicator. You can see the strength of the selling in the British pound. It's very steep, it's almost vertical. And Anna was highlighting pound CAD, and what you're seeing there equally will be a strong reversal from that uptrend. That is now rolling over, and that will be developing a very nice downtrend because the Canadian dollar is rising almost vertically, and you've got the pound falling almost vertically. So without even looking at a chart, you've now got a cross on that. This is on 3 minutes, so it's pretty quick. But on the 3-minute time frame, we've now got a really nice trend to the downside, which has already developed from here. Remember, if you get in here, you're getting in early in the trend. You pay a price for that. You've got to be patient, and you've got to put a bigger stop loss on, and certainly in terms of a wider stop loss. So you're putting more risk in the market. But in terms of your reward, you're already benefiting from this because you're already in the trend. Those who are now jumping on the trend, they've lost half that distance already, but there's still some way to go, assuming that continues on to the downside. So it's a nice example of a reversal. It's also a nice example picking up of the pound CAD of what Anna was showing you of the reversal there from the trend up. We're now in trend down. But in terms of what's going on in terms of the US dollar, really nice on cable. It replicated on the Aussie dollar, replicated on euro dollar. So we know for a fact that if we're trading any of those particular majors, that that's what we're seeing. Now, what's interesting is when we look down at the dollar CAD here at the bottom, you can see that, let me just click on there we go, that's it, click all that on. You can see that we're in congestion. And the question is, well, why are these moving so strongly? And this chart is in congestion. This is all 5 minutes, so it's pretty much equivalent to what's going on over here. And the answer to that is very simple, because the Canadian dollar and the US dollar, the red line and the purple line, in other words, are both rising together. If two currencies are rising together, there is very, very little differential momentum driving the trend, and hence you see congestion. The analogy that I always use is as of 2 parallel train tracks, which I think is a reasonable one to use. You've got 2 trains coming out of a station. They're running at slightly different speeds, but they are essentially traveling in the same direction. And therefore, there's no differential momentum in terms of a currency move to drive that currency pair, and hence that pair is in congestion, which is what you're seeing here. If we move to the New Zealand dollar, what have we got? New Zealand, we've got New Zealand falling. We've got dollar rising, so that's fine, that's okay. And finally, over to the dollar Swiss. What have we got with the dollar Swiss? We've got exactly the same as we've got the dollar CAD. You've got the dollar rising, but you've got the Swiss franc rising. So it's just a perfect example. I didn't pick it for this particular reason, but it just shows you all those aspects of, first of all, the power, if you will, of what this indicator on the left actually reveals. And almost in a sense, you don't need to go and look at a chart in that time frame, obviously, to tell you what is going on, because the strength indicator will tell you, it'll tell you which currencies are moving and therefore which currency pairs to consider, and it'll tell you which currencies are not moving and therefore just avoid them for the time being because they're in congestion. So we've got 4 trending and we've got 2 in congestion. In terms of trading any of these at the moment, to the short side, that's what the market is doing. It's pretty much buying the dollar, not against the Swiss franc, and it's not buying it against the Canadian dollar, but those are being bought for other reasons. But in terms of trading, that's pretty fine. You're not trading in isolation, and the key using any matrix like this is several-fold. And one of the key things is that it shows you whether sentiment for that particular currency that you're trading, the currency pair, is universal, in which case the risk on the trade is lower. And if it's not, if you're trading in isolation, in other words, the flow of the river is broadly in one direction, but you're actually paddling your canoe in the opposite direction, it's fine if you know you're doing it, and there may well be a good reason for doing it if there's local politics or local drivers, local fundamental news, whatever it is. We've had a lot of that with Brexit over the last few years. That's fine. But you have to know that that's the case, and most traders don't. They just focus on one chart, totally oblivious to what is going on in terms of the other charts, in terms of related currency pairs. Now, the other aspect is obviously what I've also got on here. I've got the tick speedometer below, which also gives us a heads up. We obviously got volume. We've got the trend monitor, which is giving us a clue to what is going on. But the nice thing with using a matrix like this is it gives you a lot of information from different perspectives. And by that, I mean, you can look at charts and you can get signals in terms of what volume is going on in terms of other markets. You'll get an inverse view, particularly if you're looking at something like the dollar Swiss and the euro dollar. So you'll be able to look at it from an upside down point of view, if you will, from a volume perspective. And you just look at charts in a different way because, for example, on the top line there, on all 3 of these, we've got a bearish engulfing candle set. So we've got an up candle and a down candle. We've got an up candle, down candle, up candle, down candle. Now, if you overlay that on the other, one on top of the other, yes, it's a bearish engulfing candle. But more importantly, what it is an upthrust candle. In other words, the market's risen and fallen. So if you overlay that, and we looked at that on a 10-minute chart, that would be an upthrust. So you'd have a nice big wick to the upper body, virtually no body there. You'd have a larger body here and a slightly smaller body here, but essentially it is the same principle. So if you like, when you're looking at this, it just gives you that confirmation information of, rather than trading cable in isolation on a cable workspace, you're really looking at it more broadly in terms of particularly the dollar, but also what is going on from a charting perspective and from a volume perspective on the other correlated pairs, if you will. It's just a powerful way of trading Forex and trying to get that all-important perspective. I'm going to pause there for a minute and just pass back to Anna.